Hey guys, triangle is a very classic price action pattern every trader must know. But what if I tell you that there are 3 different types of triangles? In this video I will teach you how to identify these triangles, what is the difference between them and how to trade them. Please don't forget to like this video, subscribe to my YouTube channel, and let's start. The first type of a triangle that we'll discuss is called a descending triangle. And descending triangle formation has a very particular structure. There are 2 main elements of a descending triangle. The first element is a falling trend line. Falling trend line serving as the resistance, and the price keeps setting low highs based on that trend line, respecting that trend line. And the second very important element is the horizontal neckline, and the price tends to set equal lows around that trend line. And descending triangle formation is considered to be a very bearish pattern. Why? Because descending triangle shows you the weakness of buyers. Take a look, here's our first bullish reaction from that support. Then the price tests that support again, and here's our second bullish reaction. And then the price tests that support the third time, and you can see that each time less and less buyers are buying. Buying volumes are in decline, and at some moment no one buys, and for that reason test of the neckline of a triangle leads to a breakout. Yes, and remember, trading the triangle, you should remember that the trigger that you're looking for to short the confirmation of a coming bearish movement is the violation of a horizontal neckline of a triangle. Only when you see the breakout, the candle close below, only then you can expect a further decline. Trading the triangle, you should set your stop loss at least above the last low high level, and your take profit level is usually structure based. You should look left at structure and look for some horizontal structure on the left. Hey traders, subscribe to my free Telegram channel. There I share with you daily forecasts and signals. There I share with you educational materials. It is called Vasily Trader. The link in the description below. Follow me and let's continue. Here on Eurodollar I spotted a very nice descending triangle. Analyzing a price action, let's start with highs. If we take that high and draw a trend line, you can see that here we have a very nice trend line that the price perfectly respects. And based on that trend line, the price sets low highs, right? And at the same time, right here, the price was setting equal lows. Yes, and here we have a very strong horizontal structure. And you can see that here we have a perfect example of a descending triangle. Yes, and you can see that the price violated the neckline of a triangle, and it triggered a very strong bearish continuation to lower structure levels. So remember, once you spot the triangle, the descending triangle, patiently wait for a breakout of its support, because we never know how long the price will stay within the boundaries of a triangle. The second type of a triangle is called a symmetrical triangle. And again, this pattern is based on 2 very important elements. Here we have 2 trend lines. One that serves as the resistance, and you can see that the price perfectly respects low highs based on that. And here we have one more trend line serving as the support, and you can see that right here the price keeps setting high lows respecting that. And symmetrical triangle is the so-called indecision pattern, right? And when we see such a pattern, when we spot such a pattern, we have no bias. When we see such a pattern, we should remember that it can be broken into both sides with equal probabilities. And if the price breaks the resistance of a triangle, then we will expect a bullish continuation. But if the price breaks the support of a triangle, then we will expect a bearish continuation. And you can see that price action within the triangle is very peculiar. It is very so-called harmonic. And it happens because the market found the so-called fair value price, and all the market participants agree about current prices. For that reason, the market is locally in equilibrium, and we see the contraction of a price action within that. But then we see some news. Then the market participants see some important fundamental trigger, and they start pushing the market, breaking the support of the triangle or the resistance of the triangle. Here on WTI crude oil, we see a perfect example of a symmetrical triangle. And you can see that while the market was trading within this triangle, the price action was contracting, right? But then what happened? Then the price violated the support of the triangle to the downside. Closing below the support of the triangle, the breakout was confirmed. And then you can see how sharply the market dropped. And now we are expecting a further decline. Yes, because of the violation of the support of the triangle. We know that sellers are dominating the market right now, and we are expecting a further decline. The third type of a triangle that we'll discuss is called an ascending triangle. And again, two important elements will help you to accurately identify this pattern. Here we have a very nice rising trend line being a support, and you can see how perfectly the price sets high lows respecting that trend line. At the same time, we have a neckline of a triangle, a horizontal neckline, and you can see that the price sets equal highs based on that neckline, respecting that neckline. And ascending triangle is a very bullish pattern. Yes, because right here we see the weakness of sellers. Here is our initial bearish reaction from that resistance. Here is our initial bearish impulse from that. And then after the second attempt to break that structure, we see a bearish reaction again. And this time you can see that this bearish impulse is definitely weaker than the initial one. And then the third test gives us even weaker impulse. Yes, and at some moment no one sells from that resistance, and because of that the price breaks the resistance of a triangle, and it is a very important trigger for us. And after that we usually see a bullish continuation. Trading that triangle, remember that our safest stop loss is lying at least below the level of the last high low, and our target is the closest strong structure resistance that you spot on the left. That is how we treat the ascending triangle. Here on the dollar-yen pair, we have a perfect example of an ascending triangle formation. Let me show you, traders. First of all, right here we have a very nice horizontal resistance. Yes, and you can see that the price set two equal highs based on that. And at the same time, the market was setting high lows right here. You can see that here we got three high lows in a row. So that is a perfect example of the ascending triangle. And you can see that with this high momentum bullish candle, the market violated the resistance of the triangle, the neckline of a triangle to the upside. Yes, then we got the retest of a broken neckline, and then the market bounced nicely. And now, because the market is trading in a strong bullish trend, we are expecting a further bullish continuation on dollar yen. Yes, so that is the example of an ascending triangle. Right, traders, let me know in the comment section what type of triangle do you prefer to trade. Also, traders, remember that if you have any questions, you can always ask me questions here on YouTube. Just write your question in the comment section and I will always reply. Also, traders, if you want to learn more from me, remember that I have a free Telegram channel where I post daily forecasts and signals. The link in the description below. Also, traders, please like this video, subscribe to my YouTube channel, and I will see you next week.